Hey everyone, this is Lauren over here at Acctivate. I'm the manager of implementation, and today we are going to talk about sales tax options in Acctivate, go over some of the setup, and also show how it all works in Acctivate. So let's go ahead and get started. So all sales tax setup is done outside of Acctivate and either synchronized or communicated via a specific service. Acctivate uses the setup in order to grab the proper rate and taxable or non-taxable status of orders and products. If you aren't using an outside service, Acctivate gets the proper rate information via the synchronization with your accounting software, which includes QuickBooks, Intacct, or Sima. Once it's been enabled and set up, the information can be used in Acctivate to assign to each different section. Sales invoices synchronize to these systems with the tax amount based on the rate set up in the tax category. The accountant will be reporting and paying sales tax out of the accounting software, and that's for the standard setup. We do offer integration with Avalara, so when utilizing Avalara, the sales tax calculations are done outside of Acctivate and updated on the order according to the setup therein. The sales invoice synchronizes over to your accounting software with an Avalara tax line item to include the tax amount on the invoice. The invoice itself will have a 0% tax rate, so QuickBooks or your other accounting software doesn't try to recalculate the tax amount independently via the sync. The sales tax liability is reported on and paid via Avalara rather than through the accounting software, i.e. QuickBooks. If your business requires line level taxation rules, or you have like these crazy tax rules that you have to adhere to, we definitely recommend getting set up with Avalara so you can set rules for not only specific items to have the proper rates included, but you can also set it based on product class if you didn't have a specific rule for a particular item. When solely using the basic setup without Avalara, items are either taxable or non-taxable rather than linked to specific rates. So with Avalara, you have the flexibility of being able to, like I said, specify specific information per item or groups of items rather than relying just on the tax categories from QuickBooks. So first, for the sales tax setup, you'll need to establish the taxable and non-taxable tax codes. Normally, customers set them up as quote non-taxable and taxable, but others like to give them different names. This is definitely up to you. This value is assigned to the products as well as the customers to tell Acctivate whether or not the item or customer is taxable. Also, tax categories are comprised of sales tax items and sales tax groups created in QuickBooks. This is where Acctivate gets the rate information to charge the customer when sales tax is applicable. When using Avalara, you'll still need to create two tax items, one for the Avalara line tax and one for Avalara sales tax. The line tax item is used during the sync for the sales tax amount to be added as a line on the invoice in QuickBooks to ensure that the total in Acctivate matches the total in QuickBooks on the sales invoice. The Avalara sales tax is assigned to the ship to location to tell Acctivate when to contact Avalara to calculate the tax rate and or tax amount. If shipping is exempt from tax rate, make sure to mark it as such in configuration management. If it's not marked as exempt, there's a potential of having a tax discrepancy in QuickBooks when the shipping isn't marked as such. This is another form of tax as a line item in QuickBooks for any difference in tax calculations. The most common reason you would see this tax discrepancy item is if you're using the web store module and the order comes in with a different amount than what would be calculated using Acctivate or QuickBooks. So we want to make sure that we match the web order, but also we want to make sure that we account for any discrepancies in what should be the tax calculation, because usually web stores are just a generic, if it's 8.5%, it's just going to charge 8.5%. But there could be some rounding discrepancies between the way the web store calculates it and the way that QuickBooks would calculate it. Also, Avalara allows you to assign exemption codes based on a set list of usage codes from their system to let them know when certain customers are tax exempt or partially exempt. The customer type is assigned to the customer record. Without Avalara, customer types are just a list maintained in QuickBooks for reporting purposes. They're not linked in any way to sales tax. There are a couple of other types of sales tax setup in the Canadian and UK versions of Acctivate, which include VAT, which stands for Value Added Tax, as well as a Canadian sales tax setup for line items on purchasing. And the Canadian setup is based on each line item with an override at the bottom of a purchase order. We're not going to be covering those specific setups during the demonstration today, since it's really the same setup. There's just different names or different groups that you would use, and the main difference is in the purchasing, because you have the purchasing tax or the tax on your purchases. If you have specific questions about those scenarios, feel free to contact our support team for information on your specific setup. But like I said, it is a lot. It's, basically the same. It's just the names are different. The way the tax is calculated is different. And VAT just allows you to include tax in your pricing. Okay, so let's talk about the defaults that you set up in Acctivate. There's a couple of sections in configuration where sales tax defaults are set up. The first section is in the customer options. Here you can set defaults for new customers to utilize a specific ship to tax category or customer tax code. If you ship mostly out of state or within a certain jurisdiction, I would recommend setting a default ship to tax category. If not, you can leave it blank to set for each new ship to location once you create it. The customer tax code tells Acctivate the default taxable status of your customers. If most of your customers are taxable, then set this to taxable so you don't have to select this information whenever you're creating new customers. When utilizing Avalara, add the customer usage type codes to your customer types to let Avalara know which customers are fully or partially exempt based on the taxability profile. Avalara has a list of 18 different codes for use within the US, Canada, or both, and I will show you those once we get into the demo. I'll show you where they have that information and also where it goes in Configuration Manager. You'll also need to select the QuickBooks tax item to be used during the sync on the sales invoice. Since the tax amount is synchronized as its own line item on the invoice, this tells Acctivate which line item to use. And again, this is all done in configuration management. So on top of the customer defaults, there are also inventory defaults to set up. Since some customers have numerous tax codes, it's necessary to assign the default taxable and non-taxable tax codes in the inventory options section of configuration. There are also product defaults which allow you to set the default tax code for new items. This definitely comes in handy when the majority of your products are either taxable or non-taxable. On the same section, it allows you to set the default stocking unit, control type, and cost method in case this makes sense for your business. Of course, that information doesn't relate to sales tax, but it's definitely worth noting. When utilizing Avalara, the warehouse setup will need to include a valid address. This gives Avalara the necessary information to know where the products are shipping from, mixed with where they are shipping to gather the proper tax rate for the order. So we need to make sure that that is an actual physical address and it is a valid address as well, because that'll be the origin. Okay, so now that we've covered the defaults and setup, let's talk about assigning the information to sections in Acctivate. The first one we'll cover is the customer window. Within this window, you can assign a customer tax code, exemption, certificate number, ship to location, tax category, and a customer type. The tax code is used for the basic sales tax calculations without using Avalara. This tells Acctivate whether or not the customer will be charged sales tax as a whole. Without Avalara, the exemption number is for reference only, but if you are using Avalara, this is used for the tax calculation purposes as well. The ship to location will need a tax category assigned. This will be based on a physical location of the ship to address. The specific category assigned tells Acctivate which rate to use. So when you're using Avalara, you'll need to assign the Avalara sales tax category so Acctivate knows to call their service to calculate the proper rate. But if you're not, the tax category is where Acctivate gets that rate, and that is comprised of the tax groups set up in QuickBooks. Also, the customer type linked to the customer will tell Avalara whether the customer falls under certain exemption codes. So if you are going to be using Avalara, make sure, again, that we check those usage codes and assign those to the customer type. For the product, setting the tax code to be non or taxable and checking the not for resale checkbox. The tax code itself will be overridden by the customer tax code when using the standard setup. If the customer is non-taxable and the item is taxable, the order will show the item as being non-taxable on the line. This is due to the synchronization with QuickBooks. If the line is set to taxable with a actual tax rate, QuickBooks will recalculate the tax on the line, which could potentially cause a discrepancy because, Acctivate doesn't think there should be tax, but then QuickBooks is saying that it should be taxable, so that tax discrepancy will show up. So this is why we changed the line itself to match the customer tax code when the customer is non-taxable and also has a non-taxable tax category. The not for resale specification allows you to sell items which will always charge sales tax, since the customer you sell it to will not be reselling the item to their own customers. Even if the customer is non-taxable, the item will be set to taxable on the sales order line, which prompts the calculation of sales tax for this item regardless of the customer tax status. Now, if you're using Avalara, you would set up a specific tax rule for that item to be taxable whenever it's in the proper jurisdiction. Also, when using Avalara, you can assign specific tax codes to each item or set up tax codes for the product class. If the item isn't set up with Avalara in its own code, the information will default to the product class tax codes and then the tax codes listed in Acctivate. So before we get into Acctivate, to show you how it all works and where it's set up, I wanted to do a quick recap of what we've covered so far. The tax codes on the customer and product are both utilized when the standard setup is in use, as well as the tax categories, which are based on the rates of the individual tax items in QuickBooks and assigned to the customer ship to location. When utilizing Avalara, the product tax code is used when the item isn't set up with the specific rate in the service. The tax exemption listed on the customer is sent via the service and also makes the sale non-taxable. And you can manage those certificates themselves in Avalara. And like you see here, the tax exemption for QuickBooks or the standard setup is just a reference. It's not going to affect the taxable status of the customer. For the tax category, you assign one setup specifically for Avalara with a 0% rate to all ship-to locations you wish to utilize a service. This tells Acctivate when to call the service to calculate the tax amount. And if you're using just the standard setup, the customer tax categories are where Acctivate knows what the specific rate to charge. So in Texas, we have different ones related to the city, which all break out into different portions of the total tax. And so that information as a tax group would be assigned to the ship-to location for the tax category. So Acctivate knows what the rate should be for that item. And then on the other hand, like I said, Avalara, it would just be the same tax category across all ship-to locations that you want to use the service for. So if you work with customers who are always or partially exempt, you can assign usage codes to the customer type portion of configuration management when using the Avalara service. These codes come from Avalara, and we have a list of them linked on our help site. For the standard setup, customer type is not considered. It's really just something that you can use for reporting within QuickBooks. It's not linked to sales tax at all. And one of the big advantages of Avalara is the use of the address validation to utilize a combination of the warehouse, branch, and the ship-to address. Avalara requires valid origin and destination addresses. This information is used to get the specific tax rate valid for the transaction based on up-to-date tax rules. For reporting, the standard setup would be within QuickBooks. Your accountant will run reports on taxable sales to pay the specific tax agencies. When utilizing Avalara, the reports are run within Avalara and the payable also goes through their service. So you have a little bit of an advantage here with Avalara because, they handle all that for you when it comes to the rules and, reporting and paying your taxes. So it makes it a little bit easier if you do have kind of intense sales tax setup. But if you don't, the standard setup will definitely suffice and you're free to use whichever one makes sense for your business. Okay, so let's go ahead and get into a demonstration. Okay, so we're going to start out by going into QuickBooks. And let's go ahead and look at the company preferences so we can see in QuickBooks where the sales tax information is set up. And typically it's going to require you to be in single user mode to make any changes to the company preferences. I only have one user, so that's a default in my demo. So you go to Edit, Preferences, and then you click on the sales tax and then Company Preferences. To enable sales tax, you set this toggle to yes on do you charge sales tax. And to set up the tax items and tax codes, that's all done here. Right now we only have one, taxable sales and then non-taxable sales. We do have some customers that utilize multiple or different tax codes. So if you wanted to do that, you could just add new and then create a new one for non-taxable sales, and then it'll be available in the drop-down. This is just going to be, the defaults that you use here. And then also you can set your most common sales tax item to whatever you like. Again, this information is going to be synchronized over to Acctivate and used. Here are all the sales tax items that are active that we have in the list in QuickBooks. And if you need to add a sales tax item, so let's say you needed to set up a whole new group because maybe you're in Florida or something and you pay by county or something like that. And I believe Texas is also by county, but each one, or city, I can't remember, but each one has its own set of rates based on specific jurisdictions and stuff, or, police and stuff like that. So you would set up the sales tax items for each section, and then you would set up the sales tax group to assign those items to get your total rate. So let's take a look at some of the stuff that we already have set up because it's going to be in the item list. So list, item list, and so you'll see all these sales tax items and groups here, and you see the different rates. So let's take a look at the Fort Worth City sales tax. So again, this is what I was talking about. It's split up into different sections. So here's city sales tax is 1%. It goes to the city of Fort Worth. And then we've got, Fort Worth crime control, which is 0.5% of the sales tax. Again, city of Fort Worth. And then all of these are combined to get the total 8.25% tax rate for Fort Worth. So you've got the Fort Worth Transit, the city sales tax, and then the state sales tax of 6.25%. Like I said, each one of these is an item, and then the group rate is 8.25%. So this is where for instance, if you are using the web store, if the web store charges just a flat 8.25%, sometimes the rounding can be slightly different than it would be as, 0.5% plus 1% plus 6.25%. So that's why if you have web store and you're running the sync, you may see this tax discrepancy item for rounding. It's usually going to be maybe a penny or two. Typically not going to be a large amount because it's just going to be the discrepancy between the rounding usually. So now let's take a look at the AvaTax line item and also the sales tax. So if we open this up, you can see it's a 0% because we don't want QuickBooks to recalculate sales tax if an item comes over, or if a sales invoice comes over with this on there, and the tax agency is Avalara. And then also the AvaTax sales tax, same thing, 0%. Avalara. Now these are both sales tax items. You're going to be able to use them in Acctivate because they're not included in a group. If they were included in a group, then the group would be what would be available for you to use in Acctivate. So let's take a look at the difference between the invoices in QuickBooks whenever you're using the standard versus Avalara setup. So we'll go to our customers and let's take a look at Abercrombie. And we'll look at this invoice. So you can see that each line is set to taxable, and then we have Fort Worth as the tax group with 8.25% and 89 cents. So this is the standard setup. So there's no tax discrepancy or anything like this, but this information did come over from Acctivate. And so, there was no recalculation necessary, or if they did, there wasn't a tax discrepancy because Acctivate was pulling the rate information from the tax group in QuickBooks. So now let's take a look at what it looks like from Avalara. So we'll go to Ajax and we'll just open this one. So you see the lines are marked as taxable, but it's AvaTax is the tax group and it's 0%. So now you see this AvaTax line item, 63 cents. That's to make sure that the sales invoice total matches the invoice total from Acctivate. And this is the information that you'll find in Avalara to pay for your sales tax. We'll take a look at Avalara here in a little bit so you can see what it looks like in their console as well. So let's go into Acctivate now. So minimize this and we'll go into Configuration Manager so we can take a look at where all this information is set up. So File, Configuration Management, Customer, and we'll start at the Customer Options. So you can see that there's a default customer type, ship to tax category, and tax code. So the ship to location tax category is going to say, so if we create a new customer, it's going to default to this out of state. Let's say that a lot of our sales are out of state, so we want this to default out of state because they don't pay tax. And that's if we're not using the Avalara service. If all of your customers are going to be, if you're using Avalara and all of your customers are going to be utilizing Avalara, you would set that to the Avatax sales tax. But if not, you can set it to any of the other active tax categories. And the tax code, again, that's going to be for creating new customers. We can set it to taxable sales because the ship to location is what gives us the actual rate. And so another note, so when you use Avalara, you have the option to do address validation. So you can put in, let's say, an asterisk, and we want the method to be Avalara. So what this means is that any country, we want the address to be validated through Avalara. Now, what if we also sell to Mexico? So we would do Mexico and then keep that blank. And what that would do is Acctivate wouldn't, there wouldn't be any address validation happening there. But anything other than Mexico would get some address validation through Avalara, so you would get notified if for some reason that address that you entered isn't correct. So that comes in handy whenever, if you are using Avalara, it gives you the information you need to have proper addresses, so there's no errors whenever you're calling the service to figure out where the origin or destination information is. Now, you can use the address validation with or without the tax service. So if you wanted to just use the address validation, then you just wouldn't assign the ship to tax category or even create a ship to tax category for Avalara. And then you would just, set up the address validation information that you wanted to use. Say, for all of our US customers, we want to use Avalara to validate, but, anywhere else, we don't want to use Avalara, or whatever makes sense for your business. But again, you don't have to use the address validation with the tax service. I mean, it is required, the address validation is required to use Avalara, but you don't have to use the sales tax for Avalara to do the validation. Okay, and then customer types. So customer types, you can assign these tax exemption codes. You can see here I've got government set to N, and so let's pull up the article for the Avalara usage codes. Okay, so we have these exempt transactions. This is for the Avalara integration here, and if we scroll down, we get these customer usage type values. So this is a value that can be passed at the document or line level of a tax request, which is what Acctivate is using to call Avalara. So these are pre-populated customer taxability profiles for Avatax, and then you can see that in local government United States, because we have some customers that are local government, so we set the customer type as government, and then we set that exemption code to local government. And so this is where you would get that list. If you have any questions on what your customer types would fall under using this, you'll need to contact Avalara so they can give you some direction on, which usage codes to use for your specific customer types. Okay, so now that we've talked about customer type, let's talk about the tax categories. So like I showed you earlier, we have tax items and tax groups. And the tax items that you see here, like what we were looking at Fort Worth, so there's the Fort Worth Crime Control, City, Transit, Texas State Sales Tax. But the one that's active is Fort Worth. That's the tax group from QuickBooks, and that'll give you the total rate to use with Acctivate. And also take note that the Avatax line item and the Avatax sales tax are both active. They are sales tax items, but like I said before, the reason those are active in Configuration Manager is because they're not included in a group, but those rates are 0%, so QuickBooks won't recalculate that and give it its own tax amount. Now, for this company, all the shipping is exempt, so what that means is the shipping items are exempt from sales tax, so it won't charge sales tax for shipping. Okay, and then now on to the inventory options. So we have tax defaults here. Like I said, some customers have different taxable and non-taxable tax codes. So this gives you the ability to set default ones in Acctivate as well. So you saw that in QuickBooks, and you also have that in Acctivate in the inventory options. And then we have the product defaults. Say the majority of our products are taxable sales, so we wanted to set that to taxable so the users aren't having to manually select that or decide that on their own. And we'll get into some of the differences with the products in Acctivate whenever you're using the standard versus Avalara setup. And then also, like I talked about, just a generic product default, stocking unit, control type, cost method. It just makes it easier whenever people are creating new products so they don't have to guess on what they should choose. Okay, and warehouse. Make sure that the addresses are valid addresses for your warehouse here. So we'll be using the Fort Worth and Dallas warehouse in this demonstration. Both of these addresses are valid, so we won't get any warnings about that. But if they were invalid, you would get warnings about them not being either valid or incomplete in some way. And then also, if you are using Avalara, you will have to set up that integration. And so we have this Avalara section in the services where you enter in your account number, your license key, the URL, and the company code. And that information is sent to you when you set up Avalara, and you can also have them email it to you if you reset that information. So if we go to the Avalara account setup on our help site, it talks about how to reset your license key, so that way it sends you an email and gives you the information you need to set up the connection in Acctivate. And then after you set it up, you test it, and if it's good to go, then you're ready to configure your customers to use Avalara. And this is what it looks like in the console for what we're using today. We are in a sandbox environment because obviously our demo is not going to be paying sales tax information. And then we have the development. Usually they'll send you a development URL whenever you're in test mode, so there's no way that you would possibly be forced to pay your tax liability. Obviously, if you're in testing, you're not going to actually have a tax liability from those tests. And here you can see, just like in that screenshot, we have the company code, which is where you set that information up in Acctivate. And then we also have, the nexus jurisdictions, tax codes, tax rules, items, all that good stuff in the jurisdiction. This is all set up whenever you create your account with Avalara, with Canada and the United States, effective and expiration dates, specific tax codes. These tax codes are related to the product class. So you can set up the tax code, set up a specific type, and that will tell Avalara that if there's no actual item set up in this console, that it would default to what's set up for the product class codes. And then we have the items here. So you can see specific items from demo. We've got A121 with a tax code, its own tax code, and that's based on a lookup. So if we go into A121, this is the item ID and the description from Acctivate. And if we hit browse, select Avatax, and I just searched clean. And this gives you all the clean or cleaning related tax codes. So cleaning products is what we chose because this is a glass cleaner. And then also we have, clothing, all these different specific rules that you can set to do specific tax rates in Avalara. Okay, and then we also have, the tax rules. You can set all that information up with tax types, and then locations, which is going to be your warehouse and branch information. And so you make sure that those match, have proper addresses and all that good stuff. So we'll go back to company or home. So let's take a look at we'll start with the standard setup, and we're going to go to Abercrombie. So the customer is set up as taxable, and the ship to tax category is Fort Worth because it's in Fort Worth, so that falls under the Fort Worth jurisdiction. Again, the tax category is Fort Worth, not Avatax, so this is just an example of the standard setup. So let's create a sales order for Abercrombie. And we're going to add a 121, which is that glass cleaner. Of course, we're not using Avalara, so this is going to default to how the product is set up. B10 and B20. So we see here I'll scroll down a little bit. We'll see the tax category of Fort Worth with 8.25%, 44 cents. We've got A121 is set as non-taxable. So if we view that product's tax code is non-taxable. So Acctivate puts it as non-taxable and will not calculate tax on that product. B10 is a taxable product, so since we're in a taxable jurisdiction, we're going to calculate sales tax on that line as well as this B20. And then we've got, 44 cents for those two lines. Now you can toggle the location, and this location is going to toggle the ship to tax category as well if there's one assigned. I believe these two are in Fort Worth. We've got Oklahoma, out of state. There is no sales tax. So let's go to a different customer. We'll go to Anton, and they have a taxable tax code with a tax exemption, and their ship to is Avatax. So this means that Avatax is going to be called to calculate the sales tax amount, and since there is a tax exemption, everything should be non-taxable. So we'll go ahead and add some of the products. And if we hit save, you notice that B10 is now set to non-taxable because this is a non-taxable customer. They have a tax exemption certificate, so they won't be charged tax, and they're also in a non-taxable jurisdiction for us anyway. So even though they do have a tax exemption, if they were in Fort Worth, then it would still be non-taxable, but since they're in California, it's kind of like the double whammy. We don't charge tax in California, but we also have the exemption code. But I just wanted to show that if it is non-taxable, the tax lines or each item switches to non-taxable. So that way, if this wasn't using Avalara, whenever we sync, QuickBooks isn't going to recalculate it to add sales tax to this order. And so let's take a look at a customer that uses Avalara, but they're set as non as the tax code. But like I said, with Avalara, it's really just going to be based on the locations. The tax code isn't really used. It's going to look at the specific jurisdictions. So let's create a sales order for Ajax. And it's at the Fort Worth location using Avatax. Now we're going to add that A121 again, so I can show you how Avalara can kind of change things for you. If we hit save, it's going to call Avalara, and it's going to check all the rules and see if those lines are going to be taxable. And even though in Acctivate we've got A121 set as non-taxable, according to the tax rules in Avalara, since it is a cleaner, it is a taxable product. So if you're not using Avalara, you do have the chance, if you're saying that some items are non-taxable, they actually are taxable products. So using Avalara would give you the ability to properly specify whether or not your products are taxable. And again, this 428 is based on every single line because they are all taxable products. And if we go back to the Avalara console, and look at the items, A121 has this tax code, B10 has a tax code as well, and then B20 isn't listed, but it is listed under one of these furniture and supplies product classes, so it falls under that rule. And then also the shipping is no tax, so if we add shipping to the order, it changes that to be non-taxable from taxable and doesn't add any tax amount to the order because shipping is set up as non-taxable in Avalara, but it's also set up as sales tax exempt for the tax categories. Okay, so let's also talk about this not for resale. I'm going to open up a product that's marked as such. It's taxable and marked as not for resale. So if we add that to a sales order for somebody that's not using Avalara, and let's see, CP3, you see that it's set as taxable. So if we add other items that should be taxable, you see that the others are marked as non because the customer itself is non-taxable, but CP 2003 is marked as taxable because it's not for resale. So not for resale will charge sales tax for customers that are non-taxable within your jurisdiction. That can come in handy because we've had people come to support and say, some customers aren't truly non-taxable unless, they're government or not-for-profit. And so that gives you the ability, like if you're selling stuff that your customers aren't going to also turn around and sell, you can set them as not for resale and it'll go ahead and charge sales tax, even if that customer is non-taxable, but within a taxable jurisdiction. Okay, and then I'll just show you what it looks like whenever an invoice goes into Avatax. So we'll go back to Ajax, create a new order, select it to a taxable jurisdiction. Okay, and save. Tax is calculated for everything. We're scheduled, we're ready to go, and we're going to invoice the order. So the invoice is what actually sends it over to Avalara. So invoice it, and now we'll go into Avalara, transactions, and then this is the invoice we just created. So we've got this total tax of $435, which if you click here, it'll walk you through and describe everything that happens on screen. That $435 is based on the origin address, the destination address, and also the tax date. Because like I said, when you're using Avalara, it's based on up-to-date tax rules. And then down here, you can see each item code, the specific tax code that it used. So we've got A121 had a specific tax code related to that item. And then B20 and CP 2003 were supplies. You can expand all. And this will give you the information on each jurisdiction. So you've got Texas state sales tax, city tax, Texas special tax for transit and crime control. And then it gives you that information for every single one of these. Okay, so that is all I had, at least for the demo. Like I said, you can look at our help site for the Avalara information, and also configuring your customers to be taxed by Avatax, which just goes over setting up the Avatax sales tax items, assigning it as the QuickBooks tax item. Oh, and actually, I didn't show you that earlier. So let's go back to configuration management and services, Avalara. And so what you can do is you drop this down here, and this gives you a list of all the tax items that you can choose from that are active. It gives you the item ID and the description from QuickBooks. Okay, so we've got a question about, you mentioned some issues may come up between Acctivate, Avalara, and QuickBooks. That was the tax discrepancy item. So if there's a difference in the way that QuickBooks would calculate the tax and the way the tax came through the sync, this is usually going to be not using Avalara. It's usually going to be whenever you're using the web store. I have had some customers see the tax discrepancy come over because they didn't mark their shipping as tax exempt, but the shipping in QuickBooks is set as taxable, so it sets this tax discrepancy amount. And we do have a help article about that. So we just search tax discrepancy. And this goes over, why this happens. This is where I was talking about the web store. So There's going to be possible rounding discrepancies. Let's say you have a web store and it's 8.25%, so it just flat out does the total times 8.25% to give you this rounded 293. But if you actually do 3550 times each specific tax item, then the rounding comes up a little bit differently. It comes up to 294. So that's when the invoice will create, or whenever it syncs over to QuickBooks, it'll create a tax discrepancy item in QuickBooks for that 1 cent. So that way, it's actually calculated properly, and if there is some kind of discrepancy, you're also accounting for that as well. Okay, so we do have some people talking about merging QuickBooks tax items or making them inactive and stuff. If they're being used in Acctivate, don't merge them. Just create new ones to use for the new jurisdictions, or if you need to change it or for some reason or another. And also, make sure that, if you are changing it, create new records. I mean, if you're just changing the rate, you can change that. But when it comes to merging stuff like that, just go ahead and create those again or create new records. Okay, so we have a question. They're not using Avalara, which that's totally fine. We have a lot of customers not using Avalara. Do all customers need to be set up in QuickBooks with the tax information, then set up and Acctivate again? So customers sync both ways in between Acctivate and QuickBooks, at least the main information. We don't sync the multiple ship to locations, and the ship to locations is where you assign that tax category to specify a rate for that customer. So you would just be doing that in Acctivate. So if we go to customer ABC, yeah, they've got this tax code of tax, but the ship to location is where that information is pertinent. So if you're not using Avalara, okay, so they're in Fort Worth, so you would select the Fort Worth tax category, so that way Acctivate knows which rate to use. And again, that information is going to come from Acctivate rather than QuickBooks. And back to the discrepancies, how do you address the discrepancy between Acctivate and QuickBooks? Like I said, that really only happens either if your setup is incorrect, like if you don't have shipping marked as tax exempt, but it truly is. It's not marked as tax exempt, but it is tax exempt. So, or maybe your shipping tax item is set as non-taxable, but there could be a discrepancy there. So that's really just related to the setup, marking shipping tax exempt or non-exempt. But the main reason you'll see a tax discrepancy is, like I said a moment ago, is when you have a web store and the web store just does a flat 8.25%. But whenever you break it out into each jurisdiction, that is when you'll have a rounding of 1 or 2 cents. And so that's when you'll see that tax discrepancy item here in QuickBooks on an invoice. Now, I don't believe I have any items. I don't know if this has been used in any invoices in QuickBooks. Let's see, can we do all? Yeah, so I don't have any tax discrepancies because there hasn't been any rounding issues between QuickBooks and Acctivate. Because Acctivate, if you're using QuickBooks as a standard, Acctivate is going to be calculating sales tax exactly how QuickBooks would be calculating sales tax. So you shouldn't run into tax discrepancies. Again, that's typically the most common ways we see that is when you're using web store. Okay, good question. So we have customers that have different ship-to addresses all over the country and some out of the US. Is each ship-to address set up as taxable, non-taxable in Acctivate? Okay, so the ship-to addresses, they're not necessarily the tax code, it's going to be the tax category. So the tax code is taxable or non-taxable. It's just flat out taxable or non-taxable. The ship to is where you assign the tax categories. So let's say we have 20 ship to locations here, or hundreds. I mean, if you're doing EDI, it could be hundreds of ship to locations. And each ship to location would have its own tax category based on that location. So let's say it's Fort Worth and Dallas and Canada, all those different ones. If you, for some reason, paid sales tax outside of your own state or something like that, if you paid sales tax in those jurisdictions and you're not using AvaTax, each ship-to location would have its own tax category. So the tax category for here would be Dallas because you pay sales tax for orders sent to Dallas. Also, Fort Worth, instead of AvaTax, let's say we would set it to Fort Worth. So each one would have its own tax category. And then let's say outside of Texas, our customers don't pay sales tax. So if it was outside of Texas, the tax category would be out of state because that's a 0% tax rate. And so each ship-to location would have its own tax category, and that is how Acctivate would know what rate to charge. Again, if you're using Avalara, all the tax categories would be Avalara if you wanted to utilize the service to calculate those rates for you. And so if you had all those ship-to locations, you would just set them all to Avatax, and Avatax would calculate the proper rate based on today's date, the origin, and the destination. Check out our help site if you have any questions about sales tax. Like I said, this tax discrepancy when using sales tax is a good article. All of our articles are searchable, just like you would search through Google. So if you have questions about Avalara, we have just a generic Avalara help article. We post our webinars under the Learn Activate webinars. In a couple of days, we'll have the webinar from today posted here. Our help site is a really great tool. So like I said, if you have any questions about anything Activate related, feel free to take a look at our help site. And if you don't see an article that you're looking for, let us know, because we're constantly adding content to the help site, and we would love to know if there's something missing so we can go ahead and add it, because I'm sure that if you're looking for an answer and it's not there, there's other customers looking for the same answer, and they would also need that information. So I hope you got a lot of good information out of the sales tax options in Acctivate and have a better insight on how to set that information up and how it flows to your accounting software, and also how it works through Avalara if you decide to use that integration. So I hope you have a great day, and thank you for joining us.